Good morning, everybody. It's May 17th, and Walmart just missed their earnings. Is this a big deal? Well, to me, it is. And let me tell you why. Walmart is a consumer staple. It is one of the few things that has been keeping the S&P from going deeper into the bear market that we are currently pushing. The consumer staples are only down 4% for the year. The consumer staples and energy are really the ones that are. Here's the XLP. It's only down 4% for the year, and you could see that it's had this uptrend. But lately, it's been having trouble getting past this 20-day moving average. It broke below it last about 5 days ago, 6 days ago, and now the 20 days working as resistance. With Walmart missing earnings, it can push the XLP down, which is one of the few things that's keeping the market up. The other thing keeping the market up is the XLE. The XLE, the energy sector, it has been associated with inflation and recession. Anytime you see the XLE going up, you know that inflation is coming, and it's one of those canary in the coal mine signals that there's a recession looming in the distance. Well, when you look at the weekly chart of the XLE, you can't help but notice that there's this big cup right here. And for those of you that know technical analysis, typically you have a cup and then a handle and then another pop to the upside. Another pop to the upside in the XLE means oil 150. Oil peaked at 125, came back down to the 90s. It's back up to 110. And if the XLE plays out this cup and handle, it's going to pop oil to about 150. Back to Walmart, one of the concerning things for me in Walmart missing its earnings is that if you look at it on the weekly basis, it's had this Wyckoff distribution. If you don't know what Wyckoff distribution is, I've showed this chart before, but essentially you have markup, you have distribution, and then you have markdown. And Walmart is in distribution phase. Just to give you an example of how these distributions play out, here's Amazon. There's your distribution. Here's markup, distribution, markdown. And then we go back to accumulation. The Russell, there's your distribution, there's your markup, there's your markdown. Apple, there's your distribution. It just broke down into the markdown phase. Another one of the consumer staples that's in a similar situation, Procter & Gamble, big player in the consumer staples, distribution hasn't broken down. Procter & Gamble doesn't even have a false breakout, but you could see Walmart right here has its distribution, it has its false breakout, and if it breaks below that right around 134, 130 mark, then it's going to go into markdown phase. And again, consumer staples is one of the only things that's holding the market up. So again, I'm here to caution you. We've had a couple of good days, a couple of green days. Do not get overly bullish. Take your profits, secure your profits. The gloom and doom in the market right now is very extreme, and I don't want any of you to lose money on this in this situation. So take your profits. If you're in profit, take it. Don't get greedy. Day trade, exit your positions. In this market, with the VIX being as high as it is, we don't know if the next day is going to wake up green or red. We can make assumptions based on statistics, but they're just assumptions. We are in a downtrend. We are in a strong downtrend, and we're in a downtrend until we're not. That's just basically the way it goes. Be safe out there. Understand that these distributions are common. They're rampant, and currently there is a lot of distributions in the market, and you need to be cautious of these. Stay safe. If you have any questions, hit us up on the Discord. The guys are always happy to answer any questions, and have a great trading day.